numbers this morning at 8:30, and US core PCE inflation has risen, which was really expected with the threat of tariffs, and it should likely continue to rise, which isn't a good thing, but it is expected. And consumer spending is weaker than forecast. We're going to see a confirmation on that today at 10 a.m. So the University of Michigan's coming out with its consumer sentiment survey, which it releases regularly on Fridays, and we saw last week that consumer sentiment was the lowest it has been since around the COVID days, which is not good because everyone had no idea what was going on. Think about that. There was a ton of uncertainty in the early COVID days, so everyone cut back and was trying to figure things out. The same thing is happening now to a similar extent with tariffs, because really only a handful of people in Washington know what the ultimate game plan here is around tariffs, and whether they're just a negotiating tool or whether Donald Trump ultimately and the administration ultimately believe they can bring manufacturing back to the United States, which isn't impossible by any means, but it is a 3 to 4 year road to do that. It doesn't happen overnight. There's no, I mean, if you look at a Ford facility as an example, just retooling an existing Ford plant with employees, with machinery, everything else, to retool it to build a new type of vehicle. So to go from a car to a truck, or to go from a truck to a car, it can take upwards of 2 years to retool just one facility. So to think that you're going to bring manufacturing back and have these jobs spun up within e- even by the end of 2026 is probably fairly unrealistic. Now, will it create jobs on the way there? Yeah, it will. Not as many as you'll get in the manufacturing process. And again, if you look at Tesla, which does the majority of its production, well, all of its US production in the US out of its plants in Austin and Fremont, California, it's an almost completely robotic system. So anyone putting in a new plant today is going to automate as much of that as possible to eliminate the need for auto workers and dealing with auto worker unions. So we'll see what happens out of all this. I mean, at a high level, it sounds interesting. Whether it will materialize or not, the fallout has already begun. I mean, inflation is there, consumer sentiment is down. That means that the economy is on the decline. That pulls the stock market down. So it's just a domino effect. And that's what we're feeling right now, is that domino effect. If we take a look at the markets, I see a red right now in the pre-market. So it was actually better earlier this morning around 8 o'clock, prior to the PCE numbers coming out. But you've got the Dow down 0.3%, the Nasdaq 0.45, and the S&P off 0.36%. So, what is going well in the market today? Well, let's take a look at the Yahoo Finance app, and here you can see that crude oil is up 10 cents. It's above $70 a barrel. So that's a first in the better part of a month that it's regained its $70 mark. So we'll see what happens in there. That should make it a fairly good day for crude, but we'll have to wait and see on that one. Um, the VIX is up, but it's below 20, but it is up almost it's more than half a point at 0.64. So there is some increased risk. Again, Liberation Day, April 2nd. We're waiting for that next week. And what we're going to hear, Lululemon got slammed after market hours yesterday, even though it beat on earnings and revenue. Its future forecast was uncertain, as almost every future forecast has been. So, what will be really interesting is as we get past Liberation Day and we start to hear about the strategy and the plan and where we're going with all of this, that message should provide some certainty to the market, which is a positive. Now, whether it's realistic or not is a whole other story, but it should provide some certainty. Donald Trump has also been saying there's flexibility in these tariffs, and knowing how flippant he has been with their implementation, I think that there's a potential for still a fair bit of flexibility and change. in the tariffs themselves. Obviously, the bigger the lobbyist group in Washington, the more likelihood there is for change. You can see in oil across the board, fairly red yesterday, but there's a bit of green on the screen in the pre-market today with oil up. It is only up 7 cents now, so it's dropped three. So we'll see what happens there. It's hovering around its close from yesterday. And then we get into technology, and it's a mix of green and red, but mostly red on the screen as we scroll through the list. Um, we will take a look at the QQQ. So it is dropping down into looks like it's going to be in the 478, 479 range today. So again, one of the recommendations here, if you believe that there's a further correction ahead with Liberation Day next week, is to look at buying a put if you feel like things are going to come upwards, which I kind of have a feeling they may bounce first before they decline on just some stability in understanding and clarification of the uncertainty, then maybe look at a call. So again, the option strategy typically that I would recommend would be when the market or an ETF like the QQQ goes down, I would look at buying a call into the future for when it may increase. And then when the QQQ goes up, if you think it's going to come back and correct, you would buy a put. So that would be the strategy there. Um, you can see that Microsoft is had a positive day, one of the few yesterday, but it is off and it's going to lose that gain from yesterday in this morning's session. Um, Not a number of huge movers to call out here. Tesla is one that is positive to the upside, and I think that is based on the fact that a great deal of the cars they produce in North America have North American parts or have a greater percentage of North American parts. So their need to increase cost of their cars will be less than that of other automakers. But we'll have to see how true that is. And then you also have to balance the fact that based on Elon's association with the new administration, for good or bad, he's alienated a lot of customers. And in doing so, he's missed a lot of sales, and there's a huge buildup in Tesla inventory, and they're trying to offload those, and they're having a hard time doing that. Meta looks like it's going to fall back into the 590s today. I'm looking at Meta coming down to 590, 598 today. I'm expecting to see that drop fairly significantly. And I think, I mean, that's one of the stocks that I would look at potentially buying a call option on for a week or two after its earnings date, because I do believe that you're going to see some good earnings and positive results coming um, out of Meta. And then once we get through the tariffs, which will be obviously well before their earnings, they should be able to clarify the future forecast and provide some improved guidance. That said, scrolling through tech here, again, not much to really talk about. Getting down into finance. So this was an area that I was bullish on earlier this week, and I'm starting to turn more bearish after Jeffries came out with their earnings this week. And if you look at the 5 day, they went from up in the 62 range down to 53. They dropped significantly, 8% in the last 5 days after an earnings miss. So that raises a couple of red flags around the early to announce financials, JP Morgan, Morgan Stanley, and Goldman, all of whom have been pulling back and dropping, as has most of the banking sector. Um, I'm I am skeptical here. We've not heard very much out of the Trump administration on banking deregulation. They have certainly eliminated staff, government staff and employees from a number of, call them watchdog or consumer um, eh, consumer regulated, not consumer regulated, consumer departments or departments that look out for the consumer is what I'm trying to say. Apology for struggling with that one. Um, so I think there's still going to be a pullback in these financial stocks. So we'll have to wait and see how that goes. But I do believe they will do well towards the end of the year. So the further they drop, the better the long-term buying opportunity here, obviously, with some of these big names. So that's where we are today. Keep an eye out at 10 a.m. for the University of Michigan sentiment numbers. Protect your capital, minimize your risk. Options, puts, and calls are one way to use less money but achieve greater returns. Um, and I've been trying to post about some of the examples of that to give you an idea of how I've leveraged options and continue to leverage options. So I hope that's beneficial. And if it is, or if you have any questions, please leave me a comment. Good luck in your trades today. And if you like the videos, please hit the like and subscribe.